Let's talk more about the potential impact of rising interest rates on the housing market. Obviously, housing is a huge part of the overall economy. Rates go up, your monthly payment goes up, etc. Diana Olick is joining us now. Diana, we talked about this a bit yesterday. The average rate on a 30-year fixed mortgage is about 4.2% right now. Historically low. Our parents would be cheering at that number, right? But above 4%. Are you really hearing that this is impacting home sales, or is it inventories or something else?
Well, Brian, the impact may not be in those home sales numbers yet, but I heard a new word today from a mortgage lender: panic. In just the past 2 days, he says refi customers who've been floating on the latest moves are now taking money off the table and locking. It's not the rate right now, but the fear that rates are only going up. First, take a look at the past month. A real spike coming into June after we thought things might be pulling back or at least stalling a bit. Didn't happen. To get a better idea of where the scare is, let's go back 2 months. It's all up. We are now up 3/8 of a percentage point since mid-May to around 4.125% today on that popular 30-year fixed loan. That may not sound like a lot, but it's not the actual rate or the $40 or $50 a month more you'd be paying today than a month ago. Instead, it's more of what is it going to look like? Is it a train that is just not stopping, said one lender. Because usually we see a little pullback before it goes up again, and now that's just not happening. So maybe you lock in on the refi today, and maybe you buy that house sooner than later because the monthly payment is only going to go up.
And Diana, you and I have talked about this before, but this is my concern. As everybody seems to be refining over the last couple of years, let's say mortgage rates normalize. Let's say they go back to 6% 5 years from now. Who's going to move?
Nobody's going to move. I mean, not nobody. Some people have to move because of
relocation.
Move, but there is that lock-in effect.
If you want a bigger home, you'll say,
I'm
you know
hearing
what,
about it more and more, Brian.
I'll just add a wing onto my home. I can't afford to move because my mortgage is so favorable.
Market's going up.
Yeah.
Exactly. Yeah, because people have that lock-in effect. Say they have 3.5% on their 30-year fix and they're 7 or 8 years into it and now it's 6%. They're not going to want to move. They're going to take their money, maybe pull a little money out of the house, and they're going to remodel. So I'd look at the remodeling industry.
Yeah, be careful what you wish for, I guess. Diana Olick, thank you very much.